Yeah, that's Paul here from freedomtraderpro.com. Now in this video, I want to talk about what are moving averages in Forex. Okay, if you're brand new to this channel, please consider subscribing. I do put out a couple of videos each and every week to help you move forward in your Forex journey. But in this video, I just want to talk about what are moving averages in Forex. I'm going to go into strategies or anything like that. I just want to talk about what they are and how they're kind of put together so you can understand exactly what they are and what they mean. So let's just start off by adding a moving average onto the chart. I'm just going to go into the settings and I'm going to make this a little bit bigger so that you can see it, and I'm actually going to make it red just so that it stands out. Okay, so we've got this moving average here. Now this is a MA9, which is a moving average 9 close, which is based on the close price. So an MA9 is based on the 9 previous candles of price at the time that candle closed. So it's the previous 9 candles closed price, and it's the average of that. So the smaller the moving average, it tends to be smaller to the price. So sorry, closer to the price action. So as I say, you can see this here. An MA9 is fairly close and follows the candles along fairly tightly. Now, if we change this to an MA50, it's going to move it further away. It's based now on the last 50 candles closed price. Okay, let me just show you this. We've got source here, we've got open, high, low, close. I mean, I always base mine on the close price. I don't know, to be honest, what all this other stuff is here. I just literally use the close price when I'm looking at anything to do with moving averages. Now, the thing is with moving averages, what some people will do is they'll say when it's above the moving average, I'll enter for a buy. When it's below the moving average, I'll enter for a sell. Now, moving averages are very good in trending markets. Now, the problem comes when the market starts to consolidate and price just kind of like here. If you just look at this price action here, it's very choppy. As you can see, 1 minute it's above price, then it's below, then it's above, then it's below, then it's above, then it's below, then it's above. As you can see, it just kind of moves around. So if you were to base any kind of trading off of being above or below the price, you're going to run into hot water pretty quickly, because in a consolidating market, it's just not going to work. Now, let me just change this to an MA200, which is going to be based on the previous 200 candles at the close price, the average of the last 200 close price candles, if that makes sense. So let's just look here, okay? Now, with a higher moving average, it tends to work a little bit better. You're below the moving average here, and you've got a trending market, which is just coming down here. Yes, it does wick above the moving average here, but overall, it's generally below the moving average. Then we come into a little bit of consolidation here, and you can see when it starts to trend, you come then below the moving average again. If we just come back here, and let's just find another trending piece of price action. This one here. I mean, look at this. It comes below the moving average and it stays below, and it trends all the way down here. Yeah? But when you've got this bit of price action prior to that, it becomes very choppy. And as I say, 1 minute it's above, then it's below, and all the rest of it. So moving averages are very good in trending markets, but not so good when the market is in consolidation. So if you are going to use them for any part of your entries or anything like that, you want to use it as in confluence with other indicators or anything that you're using in your trading. Because if you just try and trade off moving averages, you're going to run into hot water, as I say, very, very quickly. But in this video, really, I just wanted to talk about how they're made up and what makes up these moving averages. So hopefully I've explained this well enough. It's just based on previous price and number of candles, depending on whether it's an MA200, an MA50, an MA13, or whatever it is that you've got. It's just based on the previous number of candles that you've got on the moving average. So hope this video makes sense. Any questions, pop me a comment below. And as I say, if you're brand new to this channel, please consider subscribing. I do put out a couple of videos every week to help you in your journey, and I look forward to talking with you again real soon. Take care.